Great. Good morning, everyone. Tivon Moffitt. I'm a senior director with Institutional Property Advisors here in Phoenix. We focus on office and industrial, and delighted to be with you, everyone, today.
Great. And let's go over to Richard.
Good morning, Richard Hurd, president of Hurd Real Estate. We're a small regional firm based in Des Moines, Iowa that has presence in the Midwest and Southwest, and we're looking forward to the event today.
Richard, I love how you're so modest. You guys have a great firm. I'll say good things about you. Trent Taylor, you want to give us a quick bio?
Sure. Trent Taylor. I'm with AR Global. We're an asset management firm that manages for public REITs, and my concentration is specifically in healthcare.
Well, I'm happy to talk about it. I mean, I think it's interesting if you look at some statistics and just put it into perspective. If you look at U.S. single tenant industrial sales and you go back to 2000, there was nearly $5 billion dollar volume and 1,600 transactions. Fast forward to 2019, it's nearly a 10 times multiple. There was just under 49 billion in terms of single tenant industrial sales trend, and just under 6,500 in terms of transactions. So even taking COVID out of the equation, there's just significant interest in the sector. What's fascinating, if you fast forward to today in this environment, the demand is so strong in the industrial sector that we have a little bit of an unusual situation where most value is derived by a long-term sale leaseback, and that still holds true. But because many of these facilities, especially if you're in tier 1, tier 2 and major metropolitan areas, there's such a demand for these facilities from investors that we're seeing incredible investor interest and incredible pricing, even on midterm and short-term sale leaseback volume. So it's the darling asset class, as is medical office, and yeah, we would classify multifamily in there as well in terms of what most investors are looking at. But the sale leaseback environment for industrial assets is extremely strong across the country.
Can you guys see me now?
Yes, and we can hear you.
All right, good. Sorry about that, guys.
All right, I'm turning it over to you then, Mr. Wolf. It's all yours. I'll be here if you need any other technical assistance.
For some reason, my computer was having an issue, so I logged on my phone instead. Well, appreciate everybody taking the time. Did everybody provide introductions as to who they are?
We did real quick, yep. And we started
good.
on industrial with Tivon, but you can go any direction you want. Next 45 minutes are yours, my friend.
Yeah, no, I appreciate that. And thanks, everybody, and sorry about that. So, as we're talking about industrial, I mean, I think we all know it is the darling of the asset class, and you guys probably touched on that a little bit. One of the things that I think we've all seen is the kind of explosion of last mile facilities with Amazon and some of the other 3PLs, I mean, that are, renting out warehouse space. I would ask Richard, from a development standpoint or ownership standpoint, do you see that as a trend that's going to continue?
Absolutely. I think, COVID has just accelerated a trend that was already, in place and moving. And it's just basically moved it up probably 3 or 4 years in advance in 3 or 4 months. I mean, that whole process is, it's just more dynamic. I mean, there are people buying things online now that never bought things online prior to COVID. And every time somebody buys something online, it requires more and more distribution, more and more of those services are required. So in our view, that whole process is just, it's taking off, and I don't see an end to that anytime soon with regards to online buying and last mile distribution.
Gotcha. And Tivon, are you seeing the same thing, like from an investor standpoint? Investors I mean, I know it's not every day that, you see last mile facilities or big, distribution centers, but, we all know that industrial vacancy rates are low. And what, news came out today about Amazon kind of getting more into the prescription space. So you have to think that there's going to be more of a need for storage. one of the things that we've kind of thought too is, at least during the Trump administration, there was an emphasis on kind of, and COVID's accelerated this too, is more of an emphasis on manufacturing in the US. Do you see that as continuing under a Biden administration that, has appeared to maybe be more friendly to China than maybe Trump was? And then what's demand that you see for like manufacturing, industrial manufacturing facilities from an investor standpoint?
Yeah, great. Thank you. I think that time will tell, certainly with manufacturing onshoring. I think that there are a variety of factors in play. I think people have recognized there's considerable risks with overseas manufacturing. And so cost has always been a major driver with overseas manufacturing. But if you can't get your product, distributed in time or produced in time, I think we're going to continue to see more onshoring of product from a manufacturing standpoint. I think, talking about the last mile facilities, I mean, what's fascinating, I would ask anyone who's here watching the conference today, who would have thought that, go back 2, 3, 4 years ago, that we would be seeing hundreds of millions or billions of dollars of institutional capital being excited to go purchase industrial assets for $300-400 a foot. And it's just mind-boggling in terms of how the sector is evolving and changing. And so, we're seeing Amazon just completely transform how last mile industrial is being is occurring. And so we're going to continue to see retailers follow that and evolve, and just the investor sentiment across the board is going to continue. But just, price per pound metrics are just incredible with these facilities, and we're seeing massive allocations in terms of forward commitments and acquisitions today for these facilities, with plenty more coming in the future.
And Trent, I'm going to ask you this. On the buy side, I know you focus a little more on healthcare, but you see it on the buy side. Do you think that investor demand, I mean, we see it, on the advisory side, that, industrial deals, I mean, they're in such strong demand, and we actually see, a lot of retail investors and people that heretofore had not invested necessarily in industrial properties. When you're looking at deals today, are you kind of surprised by the amount of competition on the industrial side? Do you think that's going to kind of ratchet up more? Can you give us a little bit of color on that?
So I think you meant on the healthcare side, because that's what I focus on, right?
Well, even across the board. Yeah, I know you meant health. I want to just ask you across the board from your business. I know you focus on healthcare, but the industrial side and people that are looking at industrial deals, like what kind of conversations do you hear from people that acquire industrial properties at your company?
Yeah, I mean, it's still, a darling. Obviously, medical office for us is still a darling too. We've seen a lot of people come into the space. It's definitely shown a lot of resiliency during COVID and kind of economic volatility. So we've seen a lot more players in the market, but we've also seen a lot, bigger players willing to go down to small deals, which can still become trophy assets for them, right? So you see these institutional players buying $5 million deals, which is typically kind of unheard of, but they're well capitalized, have the cash to do it. And so we're seeing a lot of people enter the market that weren't normally there, and a lot more competition, which is just creating a lot of compression on cap rates.
Mm-hmm. Do you think that did any of that have to do with, like, we basically had, let's say, March, April, May, where really not that much was going on. People were kind of waiting to see how COVID was going to play out and what the impact was going to be. And obviously we're still dealing with it. Do you think that there was, or does it seem to you that now that, obviously we're still dealing with it, but do you think that time period, once that kind of passed and it looks like some of the REIT stocks have recovered, do you see more, much more rapid capital deployment, at least on your side, from the principal side, from you and other folks?
I wouldn't say maybe faster. I think, back in March, there was a major pause both on the acquisition side and the kind of asset management side, meaning we weren't deploying capital into CapEx, right? And all the concentration was on rent collection. And so, we've been fortunate on our healthcare REIT and our net lease REITs, that the rent collection had been very high. But I don't think there's been an acceleration of closings. If anything, it's probably allowed a little wider window of closing, where normally, you're in a 30, 60 day. There's a little bit more due diligence related to kind of COVID and making sure that, a lot of the things that a buyer is worried about, the box is checked. So right now, we're in due diligence on 2 properties, and it's already past kind of the 90-day window. So yes, it's always important to act quickly, but I don't see that people are, let's get this done now.
Gotcha. Richard, I mean, you've obviously been in the business a long time, right? And, and on the development side, you've been very successful. One of the things I think about, we're not developers, obviously, we're advisors, and then there's, principals like Trent. On the development side, you've seen, the big buildup in retail development in kind of the early 2000s. Do you foresee a situation where maybe there becomes too much industrial spec development? Like people are just cranking out warehouses and they can't fill them? Or do you think that that's not really as big of a risk?
Well, I think what we'll see is what we've seen in the past, basically. And we've been in business for 39 years, and we've touched all 4 of the major property groups that people generally think of as commercial real estate. And over the years, I mean, we've probably been guilty of that as well. When one category is extremely hot, everybody wants to jump in. And when we all jump in, it typically produces some oversupply. I think that'll probably happen with industrial, although the interesting factors that are at play here is that the demand is growing at a much more rapid pace than what we would have typically seen because of what's happening with internet buying and, just distribution in general. So it will probably happen. It probably won't happen real soon, but it will probably happen as it has in virtually every other category. I mean, it's happened in office, retail, and multifamily, and it'll probably happen here.
Yeah, and on that note, I know this is an industrial and a healthcare panel, but what do you, given all of your experience in the business and time in the business, and I think this might be helpful for everybody on here that's listening, what do you see happening with office? I mean, it's a sector that right now seems to be really, really hit pretty hard. And what do you view as the future? I mean, do you see, not only was there COVID, but now you also have, you have kind of what preceded that, was kind of the WeWork debacle and that's still ongoing. I mean, what do you foresee as maybe the future of office?
Well, I really hate to be as blunt as I'll probably be, but COVID drew a line down the middle of our economy, right? So you're either on the winner side or the loser side of COVID, and COVID really took no prisoners. I mean, it's made certain businesses suffer dramatically that really should not have suffered had there not been COVID, and it's made some businesses enriched because of COVID. Office is one that, unfortunately, especially urban office, has been hit really hard, and even suburban office. And the problem again is if we turn the hands of time back, maybe even 6 or 7 years, this pandemic would not have rolled out the way that it did. And the reason why is because most major businesses did not have all their information on the cloud 6 or 7 years, 8 years ago. And more importantly, most employees did not have high-speed internet access in their homes. And as a result, businesses have their information on the cloud. Employees have access to the cloud and high-speed internet at home. This from home phenomena is not going away anytime soon. I can see that from the big companies that we interact with here in Des Moines, Principal Financial and Nationwide and so forth. They don't have a plan to bring people back to the office until the second half of 2021, if then. So office is going to suffer, and it's again a casualty of COVID, in my opinion. I mean, it'll come back in time to a certain extent. Smaller office spaces will do better because they will be more usable, but the big office floor plates are probably going to suffer in the short term.
And yeah, I think I agree with that sentiment. It's very hard. I live in the suburbs of Chicago, and frankly, and I'm not going to name names here, but a lot of my friends, they don't, they're either, they want flexibility, but they kind of like the idea of not having to, go downtown to an office and walk across a freezing cold bridge. So I think COVID's kind of pushed that forward. Trent, it's an interesting segue into what's going on in the medical space, with telehealth, and what you see. I mean, clearly, there's a need for inpatient visits, from a health standpoint, but with the advent of maybe more consultative type physician visits, how is that, and I know this is a broad question, but how is that that kind of phenomenon, or that maybe that's going to keep growing, how's that impacting the way that you look at medical office properties?
Yeah, I mean, telehealth really started coming around about 5 years ago. And at every conference and every panel that I've ever spoken on, somehow telehealth gets brought up. I think the pandemic has accelerated that. I think, there was a lot of talk about telehealth pre-COVID, and the kind of trend to that. We continue to see, the trend from inpatient to outpatient, from on campus, which is expensive, to off campus. And, health systems are really competing for volume, and the volume that they can generate really comes from kind of the convenience and the effectiveness of care. And so what you're seeing now is you're seeing a lot of health systems do a one-stop shop. So they'll have an ambulatory surgery center, they'll have physical therapy, they'll have a general practitioner, they'll have pain management, they'll have a physical therapist in there. So it's really a one-stop shop. But every doctor that I've talked to is saying that telehealth will have an impact in maybe the size of the space, but there'll always be the need for inpatient visits. And what that's really drawn from is from malpractice. I mean, not only does the doctor have to feel comfortable with diagnosing you over a Zoom like this without really physically inspecting you, but there's also an insurance company behind the doctor that has to feel comfortable with him doing that. And so while I think telehealth, will be used for things like the common cold, some type of prescription, I think more serious and certainly anything life-threatening, they'll have to see them in person. I mean, maybe one day do we get to a point where there's a 3D body scan and you're hooked up to a million different electrodes? We're not there yet. I think that's a long ways away. And so during COVID, we've been able to see telehealth used to really screen patients a little bit more, and used for kind of the everyday issues, the common cold, writing prescriptions, antibiotics, those type of things. But even COVID patients have to go in and see a doctor. So I think there'll be some impact. I think COVID has accelerated it as a kind of trial run. But I think there'll always be the need for physical space.
Yeah, those are great points, and for me, selfishly, I definitely learned something. I never thought about the insurance companies, and obviously they've got a big kind of seat at the table. So you make
Absolutely.
a really good point about that. Tivon, what do you see on the side from investor demand for healthcare properties? I mean, are there certain properties that investors are desiring more than maybe others? You know, we've obviously, you know, you and I in the advisory space, you know, there's the dialysis clinics and things like that, and then other, you know, other opportunities. But do you still see very strong demand for healthcare properties, both on the private and institutional side?
Extremely strong from both sides of the equation. And I think we're seeing a supply demand imbalance. I mean, one of the things that's very nice about the sector is generally you can get very long-term leases because of the cost to complete the assets, the equipment that goes into it, the criticality of it. And that's what all single tenant investors are looking for, you know, safety in terms of the asset. And we've also seen extremely favorable debt. So you have this perfect storm scenario where you have, like you said, the private capital, you have the institutional capital, and private capital, you know, isn't some small, you know, $1 to $3 to $5 million investor. Private capital can, you know, place hundreds of millions of capital. So we're seeing the lines blurred to some extent. And historically, private capital has been able to pay up and chase a more aggressive cap rate. But the funds, the institutions have also been very aggressive in competing. And that goes to the factors of debt being extremely favorable, so you still have an appropriate spread, and the lack of good quality. But whether it's smaller urgent care freestanding facilities to larger outpatient consolidated facilities, ambulatory surgical centers across the board, the demand is there. And frankly, it's been so hot. We've seen a lot of assets being preempted prior to, you know, even going out to a full marketing process. We're just completing that with a 76,000 square foot facility in New Mexico. So there's increasing capital that's coming to the space. There's a lot of you know, well-established institutions like AR Global and other firms, and they are continuing to aggregate and grow, while you have private sector looking to come in, whether on an individual purchase or also on an aggregation strategy. So we don't see any slowdown in terms of interest, and you know, we're excited. It's just a major supply demand imbalance. We just need more product.
Yeah.
Yeah. And I think, you know, I think to his point is that, you know, how often do you get an office building that a tenant is going to sink $40 million of their own money into the building, right? We're not talking about land or the actual building itself, but we're talking about the improvements, right? So the tenants are extremely sticky in those situations. So while you might have a 10-year lease, there's a long runway and a high likelihood of a renewal. And kind of the clientele that you're dealing with. You're seeing all these hospital systems around the country buying up physician practices left and right and creating these very large umbrellas, right? And so when they're doing that, I love when those leases get assigned to large health systems, because all of a sudden you brought physician credit and now you're in a position with investment grade health systems. While you might be in these tertiary markets, right? You might not go buy an office building in Harrisburg, Pennsylvania, but you can be super successful by going down to Harrisburg, Pennsylvania and partnering with UPMC, which is one of the largest health systems in the country. So the market dynamics, like you said, are there, and it's brought a lot of people into the sector.
Trent, that's a great point. You know, one of the things that I think that I wanted to ask you about, and you know, I didn't email this to you, so maybe I'm catching you off the cuff, but so anybody that lives in an urban area, like I live in Chicago, right? And so you've got some big, you know, huge hospitals here. It makes me think, like, you know, let's say I go to Northwestern Hospital, right? And now they've got an outpost somewhere and I can go see my physician and kind of, you know, I don't have to go to like the actual hospital, right? And you kind of alluded to this earlier. How much do you see any potential for these large hospitals? You know, because you're talking about brand equity, right? We never think of hospitals as like brand equity, but you know, if you think of like Northwestern as a university, there's tremendous brand equity there, right? It's a, you know, national university, or University of Chicago, you know, everybody knows it. Do you see situations where like these hospitals are going to almost utilize their brand equity, not just like in the state of, say, like Illinois, but where a Northwestern, University of Chicago is going to go outside of Illinois and kind of expand and almost become like the retailization of medical.
Absolutely. I mean, it's already happening, right? Like you'll see
Right.
University of Pittsburgh Medical Center is in, 4 different states. You've seen the University of Miami extend up, the East Coast. So yes, I do think we're going there. Do I think we'll be under the like Amazon, Walmart umbrella? I don't know. Time will tell about how big they get. But yeah, I mean, you're already seeing that trend. And I expect it to continue. I think, as health systems merge and things, we're dealing with one in Virginia, which is in the process of merging with another hospital in North Carolina, and not in a cash transaction, but purely a balance sheet play, right? And so they're really starting to get better credit, which allows them, access to different things in the market. And then you also see them monetizing their assets, right? Where now they'll sell it with a lease back in place. So that is definitely the trend of large health systems merging with others to create, ultimately, I think will be maybe 20 large health systems around the country.
Wow. Yeah, I wonder that, I mean, you never hear about any kind of legislation, or at least I haven't heard any about non-competitive practices in healthcare. But, maybe that's something that, people have to look into. On, going on that note of, these hospitals kind of expanding and stuff like that, where they're kind of growing outside of their states, you alluded to that. What do you, in your opinion, and this is maybe not as much of like a real estate question, but is there a point of like saturation? Like, we look at retail, right? And sometimes, you kind of look at those individual locations and you start to see that, maybe some of them aren't as profitable or whatever. Do health systems, are they kind of looking at things like that saying, if we're going to, do this big rollout or whatever, almost like a retailer, I don't know that we've seen that expansion happen to that extent yet, but do you see a point where maybe they just expand too much?
I don't know. I mean, they're very strategic, right? They're very strategic in their expansion plans, right? I mean, the thing is, the healthcare real estate industry is a $5.5 trillion industry, right? So it's massive. You'll see doctors become affiliated with places. I mean, obviously, insurance reimbursements plays into it as well. So I don't know that I answered your question. I think they're very strategic not to oversaturate, meaning bringing on a lot of the same doctors. I think you'll see, while they're purchasing these, they'll all be under one umbrella. You probably don't even know that some of your doctors might be under the Northwestern or brand, so to speak, right? Because you've never seen a sign in their office of it, but they are ultimately rolled up to that health system. I don't think you'll see the same saturation that you see in a retail environment, though. No.
Mm-hmm. I want to get back a little on industrial, and Richard, this might be a good question for you, with your background. It's a pretty basic question, and maybe all three of you can, give your respective answers. Amazon is building like crazy everywhere, millions and millions of square feet. Do you see anybody that's able to catch them in terms of, what they do and how fast they do it, in terms of, putting up distribution centers and last mile, or are they just that far ahead of everybody else?
I think the quick answer is no. I don't think I think they're so far ahead of the competition that there's no viable competitor that can get close. Walmart would be the next closest competitor as far as retail goes. And I think that they're far enough behind that Amazon just pretty much has a lead to themselves. And I don't know that that's necessarily good for us, us being a society, the country. I think we need competition. We all need competition. And having Amazon be that much in the lead as far as that particular segment of our economy is probably not a good thing long term.
Yeah, I think it's tough, when you look at, I remember when I was, in my 20s and Walmart was coming into every small town. Everybody was complaining about Walmart, putting out the mom and pops, and now kind of Amazon's coming to, obviously making a lot of these retailers quake in their boots. And that kind of also, when I look at some of these big shopping centers, even if they're in good areas, it's very hard. People just, it's funny because you might think it's not good for us long term, but it's kind of what people want, right? And the consumer always speaks. And if you can order something and just click, it's just easier, right? So on that note, do you see any sort of, with these shopping centers, they're big land sites, what do you view? Is it possible to take some of these shopping centers and convert them into maybe distribution? They're big land sites. Do you see that happening anywhere?
To that, this could combine the two questions, right? And while you do see people getting into that space, taking grocery anchored centers and trying to turn them into distribution, you have to remember that there's another key component to that. It's not just simply setting something up and maybe making it cold storage or putting racks in it and having large ceiling heights, right? There's a whole other part of that business as far as software and hardware that goes into the distribution, right? So I think Amazon is so much farther than anybody in the design of how they logistically transport things. Just as simple as you could open up a facility, but every box has to be the same, right? And what's the chances of that, right? So I think their power and their money, so to speak, is so much farther advanced, and the opportunity for investors to take a retail center and convert it without sinking hundreds of millions of dollars into not only the infrastructure of the building, but also the distribution, via the software and hardware that it takes to operate these.
Right. Tivon, do you see, obviously a lot of these, I think that, real estate is kind of interesting right now. It's always interesting because, it's one of those industries, and Richard alluded to it earlier, where a trend catches on and then everybody kind of latches onto it, right? And then you end up with all these kind of ridiculous buzzwords. Like right now, do you hear investors talking about, essential businesses? Is that kind of a big buzzword right now in the investment community?
Oh, I think entirely so, especially on the sale leaseback, and as you go into the retail sector. I think, everyone wants to ensure that they're buying something that's going to have a thriving backbone to it. And I think that's why industrial has been so interesting. If you look at why a lot of investors flocked to retail before, it's because you had, fairly open spaces that, if one tenant left and the next tenant was going to come in and invest their capital, and there might not be a lot of TI. Now, a lot of landlords did contribute significant TIs, but people are attracted to the industrial sector because they can feel safe that they've got a functional building. And whether they have the essential tenant in there, or if something changes with that tenant's business plan, if they go right, they've got a well-located building that's highly functional. The investor can rest assured that, in a matter of time, they can get another tenant back into that space. So I think that that's been a big allure with the industrial sector from the distribution standpoint. But absolutely, and I think that to the extent that there is risk associated with the tenant being non-essential or having potential headwinds in this environment, we of course see higher cap rate opportunities, and you get a segment of investors that are trying to seek those out and play in that arena. But it's clearly, especially for the institutions, they're very sensitive to that, want to make sure that it's a very disciplined investment and make sure that the company has sound footing.
Yeah. And so Trent, you're probably pretty well positioned, being in the healthcare space, pretty well positioned. It's, these are all, generally, I think every kind of healthcare business, maybe not every, but for the most part, essential businesses. So it's like, we know when we take it into, a medical deal to market or something that's healthcare related, that's something that, is a buzzword that, people see that seems to resonate with people. I assume that that's an area that you want to, that other people want to continue to grow. To that extent, I want to ask you about hospitals, the actual hospitals themselves. So you got these, big hospitals. Do you think that there's still, as these hospital systems continue to kind of spread out their tentacles, do you think there's going to be a need for the actual humongous hospital facility? Is that going to continue, or do you see that maybe, kind of less of that in the future?
Yeah, I think in the urban areas, I think the hospital will still be needed because the population is there and the volume is there to justify it. I think in the suburban areas, you'll see them, especially as these buildings age, right? A lot of these buildings were built, 50 years ago at least. So the age and the infrastructure of the building is starting to take place, and that takes a major capital investment to improve, whether it's, on a triple net lease basis, whether it's the hospital systems or the landlord's responsibility. So I do think that you'll see some shrinkage of large hospital building infrastructure, especially in suburban markets that don't have the volume, because the trend again is from inpatient to outpatient, on campus to off campus, and all about quality of care, providing the best quality of care and the most convenience to its patients. But, Mr. Moffitt started the conversation talking about statistics, right? And I have something here that says, every day for the next 365 days, for the next 20 years, 11,000 Americans will turn 65 years old, right? So that's about 4 million people a year will turn 65 or older a year. And 5,500 of those will turn 75 and older. So it's about 2 million. If you look at the doctor visits between over 65 and under 65, right? A typical average American 65 and older goes to the doctor about 7 times a year. Under 65 is closer to about 4 visits a year. And so if you're looking at the statistically over the next 20 years, that's 30 million people additional, 9 million more visits a year, which is really an astonishing amount of visits, right? So, I think the runway is there, that medical will have kind of a long trajectory. I do think you'll see some shifts in dynamics from, like I said, the on-patient to to outpatient and off-campus, more movement of off-campus, and a little bit of downgrade of large hospital buildings outside of the urban areas.
That's interesting.
I think what's interesting too is if you look at, over the last 6+ months, a lot of these outpatient facilities where the systems make a lot of their money for those facilities, a lot of the services were not open, and so these are very profitable operating centers for these institutions. So the opportunity to then go leverage in many of these cases owned real estate that they can then go do a sale lease back and access capital just provides tremendous opportunity for the institutions and all of us in the space. So Richard talked about it. There's winner and losers, and I think the healthcare systems, for the most part, most of them are very disciplined from their financial basis. So they're in very healthy circumstances. But this allows some dislocation in the marketplace where they can go tap into sale leaseback capital to provide operating funds for other initiatives.
Mm-hmm. Although some of these regional operators and local operators, like if you're a local or community hospital, they're challenged, right? I mean, it's hard to compete against,
absolutely.
Some of the bigger operators. So, well, I think we've got 5 minutes left. So I think we want to open it up for any questions that people have in the chat room for any of the panelists. Somebody asked, this is a question I think somebody asked about antitrust and Amazon. Richard, I mean, with your experience, I mean, do you foresee, I know me personally, like, I don't think that it's going to be very easy to like break up these companies. I mean, they're so diverse, they're in so many businesses, and there's competition in every one of these businesses. So do you foresee any sort of legislation that could come along where, you know, some of these companies, whether it's Amazon or Google or any of these companies, can be broken up?
I think that's going to be very difficult to accomplish. And you touched on it earlier in your comments that people want these services, right? Now, whether or not the companies get so big and so powerful that it's not good for us in general, I'm talking in the macro sense, remains to be seen. But people want these services. Even my wife buys stuff on Amazon all the time. And I keep telling her, you know, look, we make our money, you know, building bricks and mortar, but it doesn't matter. So
Right.
there is so much demand. I'm talking across the spectrum, whether it's people that are young, middle-aged, or in older, people want those services. And I just don't see much happening to change that. It's here to stay. And quite frankly, I mean, most everybody I know loves to buy stuff on the internet and have it delivered to their front door. So we'll see what happens, but I don't think there's going to be any legislation to change the big companies, you know, the FANG group anytime soon.
Yeah, I agree. I don't even think that, you know, when you look at like Mark Zuckerberg or, you know, any of these people in front of Congress, I mean, I even have a hard time believing they even understand these businesses.
Right.
I mean, and how diverse they are. There's a couple other questions. You know, so, and this may segue, this is probably for Trent, but, you know, dialysis clinics, right? Like there's been talk of, and some of these smaller kind of buildings, like I know that, you know, we've sell DaVitas and Freseniuses, but there is conversation from some people that are concerned that those services are going to be brought into homes. I don't know if you've heard any of that or if you see any of that, but just want to get your thoughts on that.
Yeah, well, we do in our healthcare REIT have just a few of DaVitas or Freseniuses. We really look at that more as a retail asset, right? So not specifically the healthcare use. So we do have a number of those in our other REITs, which are much more focused on retail. Obviously net lease. There has been a lot of discussion of what's going to happen with that in the future. I'm a big proponent of DaVita Dialysis and their structure and their organization. I mean, if you've read books on kind of their past and where they are now, they do a lot of great things internally. To be honest, I'm not educated enough to tell you that'll go away. I just don't know. Again, we look at that more on a retail basis and not strictly a healthcare play.
Right.
I think that we can rest assured. I mean, we were involved in a large a sale with Trent's counterpart, AR Global. The in-home dialysis is a very niche, very small area. And if you really study and look at the systems and infrastructure that's required in dialysis, and if you look at the patient care mix, there's an extremely low risk of the business evolving to where you don't have these clinics. It's a very extremely safe environment for investors, and the cost, I mean, Trent talked about it before, the cost that tenants put into a lot of these healthcare spaces, with dialysis being no exception, it's exceptional. You are running an individual's bodily function that they can't live without. So it's not going away.
Right. Okay, I think, well, it's 10:45 Central Time, so I think that concludes our panel. And just want to thank everybody and all the panelists for joining. So thank you, everybody, and appreciate everybody taking the time today.